Welcome to Investors Insights. Our topic today, the truth is the first casualty. We're going to explain that topic as we get further into our vlog, and we've got a lot of information because this has been a busy weekend. It's been a historic weekend based on what's going on in the Mideast in relation to the U.S., Israel, and Iran. And we're going to address these things in relation to the markets and your financial blueprints. What I'd like to do first is just mention that on Wednesday and Thursday, we are hosting our annual Investors Insights. And all our seats are full, they're taken. But we are going to do Zoom during our meeting. And if you're interested, please let us know. We would love to have you join us because what you hear in the vlog today, we are going to continue to elaborate as well as look at details and situations and scenarios, possibilities that we may see later in the year. Now, with that, I'm joined by my distinguished colleagues, Trey Booth, Bobby Norman, and Ty Miller. And what we want to do this morning is just really kind of conduct our meeting, or this vlog like our meeting, I guess I should say. And Ty, I'd like to start off with you because when we went in the meeting this morning, and we do this a lot, the first thing we do is look at where the market currently is trading and also the technical analysis, the support levels that we are looking at. And so if we were taking a snapshot here, talk to us, and folks, get your pen and paper out to write these down. Talk to us about where the market currently is following all that took place this weekend.
Yeah, I think it's important to look at, where the market is, technically speaking, after big geopolitical events like this, of course. So currently, the market is holding up pretty well this morning so far at 6,845 roughly. That's the S&P 500. And kind of where are we going from here? Or where do we have support? Obviously, when things like this happen, people say, all right, what's the downside, right? That's what you want to protect.
That's correct.
And so
yes, very much so.
On the downside, we have pretty strong support around 6,522 to 6,630, which is roughly a 3 to 5% drop from here. That's our 200-day moving average roughly. And then also we have further support, even stronger support around 6,150 or 6,200, which was last year's breakout zone. And that's about a normal 10% correction. So if you're looking for, kind of some lines in the sand, what levels do I really want to watch to make sure that things aren't going haywire? You really want to look at again, 6,522, 6,630. But then even further support at 6,150 and 6,200 to kind of, establish where we're at.
Right. And we're not saying that the market is going to have some big drop. We're just saying these are levels you need to watch as we're having volatility and news stories come out and new developments occur in the situation in the Mideast.
That's correct. I think it's important to note that the market's still in an uptrend.
Yeah, which ties us back then, Bobby, in relation to what took place this weekend, you pointed out about the S&P 500, the strength in the market, broadening. So talk about that. So folks, listen to this because there's going to be a lot of news this week and it's going to cause volatility. So talk about it, Bobby.
Yeah, obviously with the news in the Middle East causing volatility in the markets, I want to talk about a positive development in the market, and that is that the market is broadening out. In the past few years, the S&P 500 has mostly been driven by a handful of stocks. And we've been telling clients that a healthy market is one where more than just 7 to 10 stocks are driving most of the market growth. So as you can see in this chart, we are seeing the market broaden out. And since October of last year, that you can see in the light blue columns there, you can see the different market caps of the S&P 500 performing better. And it's no longer just the top 8 stocks. And the Mag 8 stocks have actually been underperforming in recent months as the rest of the index has been showing strength. And that performance by more participants is healthy and offers a positive backdrop for the market as we deal with the uncertainty that we're seeing in the Middle East and as we enter the second quarter of a midterm election year that has historically been weak for the market. So the market broadening out is a key positive with all the noise going on.
No, that also is well said. So if you've got this going on in the Mideast, what a great scenario to have with the strength in the market. and going back to the support levels that Ty has told us about. Okay, so folks, we've given you the basis where we've looked at the technical analysis. We're looking at the strength of the market and fundamental analysis. Trey, you jumped in to really address what's going on in the Mideast in relation to the markets and what to watch for as we go through this next week or couple of weeks. Talk about that, because that's where our topic for today's vlog came from. You know, the truth is the first casualty. I'll let you finish the sentence in your presentation, but I thought it was well done. So talk to us.
Yeah, Greg, you nailed it right on the head. Yeah, it's often said that the first casualty of any conflict is the truth. And so when we are taking a look at the news coming across, we want to take a cautious approach. Often the first report, second, or even third report can often be wrong. And so reacting to initial reports can lead you down the wrong road. So what are we watching? We watch price. That's what we're watching closely. Price action in many things across commodities, stock market, bond market. What we want to do is look through the news to see how it's going to impact our clients' portfolios through the markets. And to do that, we're looking most closely currently at the price of oil. Whenever there's a conflict in the Middle East, the price of oil is usually the indicator of how severe that conflict is and where that flow through is.
Absolutely.
And so what I've got here is the chart of the West Texas Intermediate crude price. You can see here, I chose the 5-year chart because that encompasses the conflict in Ukraine. You can see there on the left side, back in 2022, the price of oil spiked all the way above $120 a barrel and stayed above 100 for a while. Today's spike, we're right above 72 as we're recording this right now. That's higher from 50, but nowhere near the 122. So much less of a knee-jerk reaction today. Some of that's driven by the fact that other OPEC members have come out and said they're going to increase production. So maybe that's dampening the negative impact. So how does oil price impact portfolios and markets? Obviously, it impacts individuals with price of gas at the pump. That's the first layer. But really where it impacts it is the flow through of inflation. We're at a fight right now between inflation and productivity and what the Fed's going to do with interest rates. And with higher oil prices, that makes inflation a lot stickier. And with the stickier inflation, it's harder for interest rates to come down. And so what price are we looking? We're looking at oil. We're also looking at the 10-year Treasury. That's important. 10-year Treasury yield right now has been a major barometer over the last few years. If interest rates get above 4.5%, the stock market sells off. As long as they stay in this range of low 4.5, we have a healthy market. So we've got oil, and inflation, interest rates, and then that flows to the S&P 500. As long as we can keep inflation within a range and interest rates within a range, and the market, like Bobby and Ty pointed out, is in very strong footing, and we have no reason to expect this uptrend to be flipped on its head. But again, we caution making any long-term or knee-jerk reactions to news reports. So we're going to watch price action, and we're going to adjust accordingly as things come out.
Yes, and we're going to be on top of it. We're going to be watching it and moving accordingly. We also will be keeping you informed. So I want to emphasize Investors Insights Wednesday and Thursday. You can participate by Zoom and hear even more about these topics. That's very important, and we're proud of the fact this is our annual event that we do every year to inform our clients. We'll also be willing and available to talk to you one-on-one by phone, by an individual Zoom. We also, through our social media, are going to be keeping you updated. You know, I keep always listing them, but, you know, Twitter, LinkedIn, Facebook, Instagram, YouTube, our podcast, the list goes on. We want to make sure we get information to you, because if you have information, you have knowledge, and knowledge is power, and knowledge takes away anxiety. And we hope the information you got today takes away anxiety in understanding that we're here watching it and researching it. All three of you, I want to commend you here on this vlog for the amount of research you did over this weekend to make this happen and to keep our clients informed. So with that said, we will keep you informed this week, but we want you to have a great week. We don't want you to worry, and just know we're here. And every day, as I like to say, we're striving to see to it that our clients have a better, richer, fuller life. And we are very appreciative and very blessed to be working with you. Have a great week. We will talk soon.